Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Well, it was another pretty interesting week with interest rates and also just overall political events. Rates finished the week worse than where they ended last week, and the reason is not because of economic data. We saw a lot of economic data that was introduced into the market, but the market wasn't driven by that. It was driven by geopolitical events. When it was announced on Monday that Russia was moving troops into Ukraine, there was a huge flight to quality. Money moved from stocks into mortgage-backed securities and treasuries, and actually from global markets into mortgage-backed securities and treasuries for the safe haven, just in case things got out of control and there was going to be some conflict or greater conflict in that region. Now, things reversed itself on Tuesday. So on Tuesday, the events in Ukraine and Russia seemed to be settling down, and then everything reversed itself, and money flew from the safe haven of mortgage-backed securities and treasuries into the stock market. And actually, the stock market finished, the S&P 500 finished with record days on Tuesday, Wednesday, and Thursday. And this was really exemplified because when the S&P 500 set these records, interest rates really took it on the chin. And the reality is interest rates are worse than when, before these geopolitical events, and the stock market is better than when things settle down. So again, things were just exacerbated. So as things settle down, I believe that we might see a correction from stocks and also interest rates. Now, today we also saw the jobs report, and that's also a big market mover. So that also really affected interest rates, and that actually hurt interest rates even further because there were more jobs added to the economy. The BLS reported that there were 174,000 new jobs added to the economy. They also revised the previous 2 months upward about 25,000 jobs. So that good jobs report caused interest rates to suffer. Now, we are recovering a little bit of ground because, again, this isn't a barn burner of a number. However, it was more than what was expected, so that is causing interest rates to suffer a little bit. The unemployment rate actually increased from 6.6% to 6.7%. And that's due to just more people getting in the job market and going and looking for a job. And now they're counted on the unemployment rolls. So that's what happened with interest rates. Again, rates got worse this week than where they were last week, but they're still phenomenal. They're at about the worst levels since just February 17th. So again, still really good levels because we had saw at the beginning of the year pretty good positive movement to interest rates. So interest rates are still fantastic, and that means that I think we're going to see, again, another really good year in terms of the home buying season. We're entering spring and summer, and again, that's when most people are buying their homes. And just like last year, I think that we're going to see multiple offers, see housing prices going up. And so I would highly encourage to get with your clients right now. Tell them to get credit approved because, the mortgage market is just a little bit different these days. Getting a loan is a little bit more intense, so it's better to get through those things now because contract dates are going to be shrinking. There's going to be multiple offers, so your clients are going to be much better positioned by being credit approved as opposed to just being pre-qualified. So get them in there and get them talking to the mortgage professional now. If you have any questions, please give us a call. We're happy to help. If you're working this weekend, so are we. Thank you guys for joining me with Java with Jared. We'll keep you informed with what goes on with interest rates and geopolitical events next week. If you have any questions, please give us a call, and we'll talk to you soon. Have a wonderful weekend and a wonderful week. Talk to you later. Bye-bye.